After the tech-heavy Nasdaq leapt to a 14-year high yesterday, Apple shares also touched a record peak last night. Ending at just over $100, the share price beat the tech giant's previous closing of $100.3 2 years ago. The boost comes as investors anticipate the introduction of new products, including wearable devices and a payment service. Apple stock often rallies in the lead up to a launch, only to fall back once the new gadget goes on sale. Analysts claim that the record high share price marks an endorsement for Tim Cook, Apple's chief, and his growing team of executives. Does it? Let's speak to Yannick Naud from Sturgeon Capital. I mean, that's the thing, isn't it? You know, they have to come out with new stuff all the time. So that's spinning plates, isn't it?
I mean, I think the expected sales for next year is $200 billion. So whatever they come have to be a multi-tens of billion-dollar product. I mean, there's been some rumor. I mean, some analysts are predicting that if they start selling a watch, they might be able to sell 60 million watches the first fiscal year. So we're talking about this kind of amount. And even this product alone will not really move the needle. They need successful iPhone 6, probably 2 iPhone 6, iWatch, and many more products.
And an iPad Air 2, I'm reading as well. So they've got to go through the whole range of the popular products and just update them. And they have to also be convinced, don't they, that people who like that kind of stuff will buy them. And that sounds really obvious.
Yes.
But if you've got one, it's almost as if you've got to buy something new, that's a big dependence for a company to depend on, isn't it?
Yes. There's two things. First of all, they have to make sure that existing clients will upgrade, I think, and it's not obvious. As we saw for the iPhone 5, some people did not upgrade. And we saw after that the share price went down almost 50% because in April it was at around $56. And if they really want to grow, they need to convince other users, like Android phone user or owner of a Samsung phone, that Apple provide a better solution for them.
And there's and there's a China complication to all this, isn't there, in a complicated world of government subsidies?
Yes, right. I mean, this year China was one of the biggest driver of sales growth for Apple. I mean, you have to keep in mind that if during 2010, 2012, the sales were going up double-digit, between 45 to 65% a year. Now the sales are increasing probably like 5% this year. But this year, it was the first time that they were able to sell iPhone through China Mobile, and they saw the iPhone sales going up 48%, for example, this year. So China was the main trigger of the growth for Apple. Having said that, since August, there's quite a lot of negative news coming from China. China Mobile will reduce their subsidies on some phones, including Apple and Samsung, $2 billion. It's a 38% reduction, so it is important, I think. The public servant will not be able to buy most of Apple product because the procurement list has changed.
Okay.
And there's been some problem in terms of securities and in terms of keeping data from a Chinese customer. So all in all, not a lot of good news from China.
It also looks as though they're going to be opening an outlet in Dubai in 2015, I suppose, which again is a massive market that they need to get into. That would really be a game changer, wouldn't it?
Yes, they need to improve. I mean, right now in developed markets, Apple, the Apple is still shining. It's a very beautiful brand. It's a and they still, and a lot of markets are still not having, not able to buy Apple. So I think right now in developed market, a lot of people have the possibility to buy the product, but the shine is still there in developed market, and that could be the next growth area.
Terribly briefly, are you worried about a tech bubble?
Well, I think there is. I mean, I think there is some evaluation. I think especially in consumer stock, probably not Apple, because Apple is trading around 14.5 times earnings. So all in all, it's still priced as a low growth company now. I think it's the biggest market cap in the world, but it's not, it's not one of those biggest internet startup company.
Yannick, thanks so much indeed.
Thank you.